The global markets are in a turmoil. This is post the announcement of Trump's reciprocal tariffs. But for how long will we continue with this lull, and what's the way ahead for the market? Ramesh Damani, who is a BSE member and a market veteran, shares his views in sectors that he is bullish on right now. Listen in.
My sense is that in the back end of this year of 2025, all these measures that seem so draconian and so unrealistic are likely to be reversed course. I cannot imagine America with higher inflation, higher housing prices, poor securities, no friends existing or going on for more than 6 months.
So, Mr. Damani, can I say that what looks like an iron fist right now from the US administration, it's a matter of time an olive branch would come, and the tariffs, which may look draconian, which may look very high, ultimately things will mellow down and things will start coming back to normal?
I think that will be one part of it when they realize themselves they've bitten more than they can chew. Yes, definitely that will happen. But I think more importantly, and I truly believe that the world is moving on. I think the world has tried to be patient, tried to kiss the ring, tried to, mollycoddle him. They visited him. You can't, as a US president, ever say that Canada is going to be my 51st state or Greenland is mine. You just can't say that. You negotiate it, maybe have a treaty, maybe spend years trying to put it together. But you can't use the threat of force in the world. The world has changed completely. It's not the world of the 1800s or 1850, which Trump harkens back. So I think, yes, they will reverse it. And B, the world will move on. So the world will continue to prosper. I think that people, US is only 300 million people. There's 8 billion people elsewhere in the world. They want a better standard of living. What is ironic and what is tragic, Nikunj, is though America taught us all this, free markets, competing global, immigration, and they themselves are turning back on what has been the greatest strength. So I think the world will move on. I think that's my call, basically.
I've learned this from you, that whenever a big event is coming, read and be prepared. So I actually happened to read Adam Smith's famous book, Great Nations, on the impact of globalization. And this is completely opposite of what financial history has taught us in last 200 years. This is completely a recipe of what not to do rather than what to do. So what should investors do, Mr. Damani, now? Divide the world into two, look at companies and sectors which will benefit from their internal growth rather than external growth, and avoid anything which is directly or indirectly dependent on US?
I think you're right. I think this whole principle of comparative advantage is so important in the world. It has made the world prosperous. It has made the world, expanding. We haven't had a great war since in 75 years. And you're going back on all of that. So to answer your question more directly, what should an investor do? I think first, don't panic. I think India has its own strengths, and we will recover from this blow, as markets are even suggesting right now. But instead of looking, when we were young in the 80s and 90s, we always look for export-oriented centers, people that earn in dollars. I think you look now at people who are prospering in the domestic economy, people who are not impacted by tariffs or tantrums that Trump is throwing at them. So you look at those sectors, you look at sectors with some intellectual property. I think China seems like a big loser right now, but China is already building the capability to take on America. And it as might seem like heresy and might seem like too fast pronouncement, but we could see the rise of China in the next 20 years to take on America as a rival. I think clearly in terms of what they've done to their economy, in terms of technology, in terms of trade, they're now trying to match America, and America is not understanding. The fact that they've got DeepSeek out there suggests that they've made very rapid advances in chip technology, very rapid advances in artificial intelligence, which has been America's growing point. So I think Trump is overstating his strength. Instead of working and bringing the world along, he's found a world suddenly with the US as no friends. Canada's best friend is no longer a friend. NATO and Europe, best friend, no longer a friend. And China, on the other hand, is building alliances, Silk Route, Brazil, even making a rapprochement with India. I think people are moving on. So I think you're right. You need to rejigger your portfolio a little bit. But I don't think there's any reason to panic. India is a domestic, internal-facing economy. It has enough strengths. And we don't want to go back to, I recall the India of the 70s and 80s in which we grew up, Nikunj. We had the ambassador card when we had tariffs and protectionism. Do we want to go back there? People don't remember that, but in 77, 78, and when Japanese imports started coming to America, the American cars were a joke. They were such a poor quality that people wouldn't buy them even at 20, 30% discount. So once you have protectionism and tariffs, the quality will start deteriorating, the prices will remain high, and there'll be a stagflation quagmire which is going on in America. So I'm pretty hopeful sitting today that A, the US will reverse course, and B, the world will go on though.
So, Mr. Damani, that brings me to my next obvious question, which is the market reaction today. Banks are up, they are domestic facing businesses. IT is down because it is dependent on global factors, and especially Indian IT companies are getting dominant amount of business from US. So is the market reaction justified, where you need to switch out of at least IT and pharma and back to perhaps domestic oriented sectors?
I mean, yes, to fit to domestic oriented sectors, yes, your portfolio should be allocated there. Somehow I do have exposure to technology, and they are down, as you correctly pointed out. But I think it's a fairly rigorous sector for the next few years. So I wouldn't be in a hurry to get out. I think they'll do fine. I think the whole world runs on software, and you kind of get that processing power in India, the GCC capability in India. So it is hard for me to see the sector going through a very strong recession. There's probably a more of a knee-jerk reaction.
Zamani, you always said the following, that every time when there is a reboot in the system, crisis will always create opportunity. So in this reboot right now, where in the market an opportunity is getting created for long-term investors? I'm using the word long-term investors.
Yeah, I'm glad you're using that term, because that's really the good way to look at the markets. And we tend to look at markets in 3, 5, 7-year snapshots rather than what will happen in a quarter. And I think one theme that has pervaded this bull market for the previous 5 years has been the leadership among the public sector stocks, because they have shown that corporate governance can improve, order books can improve, and they can deliver on the results. So I would continue to bet. They're largely domestic facing, so I'll continue to bet on some of those sectors. I think one sector that stood out today was the pharma sector, because it has been exempted from tariffs for now at least. But within the pharma sector also, we are finding enormous opportunities in Indian companies that are building intellectual property for the first time. So I think within that sector, we'll look at those companies too. There's something in physical digital infrastructure that I've been mentioning about, which probably will get a boost given the fact that we're going from analog to digital. So I think there are plenty of pickings. I think you decide what you want to bet on. If it's exporting directly to America, I'd probably reduce my weightage there. But having said that, I remain optimistic about India and optimistic about the bull market continuing.
I will specifically pick up some words, because we've discussed these points in the past, and these are some points which in a sense you are now getting identified with, which is first is PSU. At the at the peak of pessimism, you said, I am a buyer in PSU stocks, and last time when we met you said that the leadership in the PSU stocks is not over yet. So are you still confident that PSU stocks have a long way to go? If yes, why?
Yeah, I've changed some allocation. I've gotten out of some old stocks, gotten into some new stocks. I think if you look at, say, the two sectors that I'm particularly bullish on, the defense and the construction space, I think they have very strong order books, very strong visibility, good dividend yields coming through, better corporate governance, and they're completely domestic facing. So I think they will do fine over a period of time. So we continue to like those sectors, Nikunj. I also believe that the bull market, the last 2-3 months was a very severe correction in the bull market. The bull market has started again. I think we bottomed out and we started again. And I think this was just one more roadblock on the way to the bull market, which the market may have conquered today or may conquer within the next few weeks.
You also mentioned last time when we met that I'm fully invested and the bull market is not over. So are you fully invested right now, and why do you continue to maintain that the bull market is not over, given that economy has slowed down, given that the base effect has kicked in, given that now we are staring at a probable slowdown in the world because of tariffs?
Good question, Nikunj. To be perfectly candid with you, I had taken some money off the table when we had the wobble in October, November. I was getting nervous, so I also took some money off the table. So as a matter of fact, I'm not fully invested, but I'm looking to get fully invested. I'm looking again to place my bets in there. Why do we think the bull market is continuing? because that was the first correction we got out of 4 or 5 years. So it's typical that you will go through corrections and shake out. So only people who are convinced will be able to make the true money that a bull market offers you. So that was just a shakeout, I believe. Within the, say the market peaked out at the end of September. By October, November, you're finding individual stocks, large quality, broadly traded stocks were started making new highs. Bajaj Finance, Shree Cement, United Phosphate, a lot of stocks are making new highs. That can't happen in a bearish phase of the market. It had to mean that market is just rotating in and out of stocks. So the fact that making new highs was very hopeful to me. Secondly, I spent the last 3-4 months visiting a variety of companies. I've visited various companies, just knocking on the door, trying to find out what's going on. And everywhere I go, Nikunj, what I'm finding is people talking about expansion, growth, profit, margins, taking on the world. I see no reason to be bearish because the entrepreneurial class has taken hold in India and there is no leverage in the system. Bull markets typically end when there's excessive leverage. You had leverage of the size of a mid-cap company in the Indian stock market. So I think all the signs indicate that what we experienced in the last 3 months was just one of the very severe corrections. And the market will probably resume, and I would dare say, take out the old highs in a matter of time.
My producer is insisting on my ear that 20 minutes done. And I'm going to just request him that Mr. Damani is an old friend and we don't get a chance to interact with him. So I'll take the liberty of extending my appointment by another 10 minutes. Is that all right with you? I've got lots of questions.
That's quite all right, Nikunj. Always welcome to be on your show.
Mr. Damani, so that brings me to my next question, which is that every time a shakeout happens in the market, leadership changes. I'm going to quote you again, sir. This is a quote which I learned from you, I think, 10, 12 years ago. Courses remain the same, horses they change. So the course is India. Where are the new horses?
Again, Nikunj, I mean, it's a fluid question. I believe that the leadership will still rest among the public sector stocks, as I mentioned before to you, among this digital infrastructure. People are building the digital infrastructure. I mean, the basic, UPI, KYC, Aadhaar, Digi Yatra, those kind of applications, there are multiple companies there that you should be taking attention for that, because this country is leapfrogging, is going from the analog age to the digital age. So while our highways and dams and stadiums may not be on par with the rest of the world, I think in digital infrastructure we've stolen a lead on the world. And the companies that are doing that are still broadly unrecognized and still offer a lot of opportunities, not only in the domestic market, but also in global markets, because some of them have variable models of revenue. And as the base increases, the revenues will increase out there. So I think that will be a good sector. Pharma was a sector that stood out today. And for me, surprisingly, Nikunj, I have not been a big believer or I would say, understanding of pharma. But increasingly, I find that the Indian companies, the people who do CDMO and those kind of works will probably make money. But increasingly, there are companies in India that are doing intellectual work, intellectual property work, patented work which will patent molecules. And they could be anywhere from antibiotics to vaccines to, other drugs for Alzheimer's and the like. I think this is a good time to buy those businesses. One of the businesses that we bet on recently was a company that explores mineral rights, because I think there will be a full-on interest in people that can control rare earths. So you want to try and find positions and bets accordingly. Yeah, I don't really find a dearth of opportunity, to be honest with you. When I go and visit the companies, I'm fairly encouraged. So I am unfortunately not belong to the camp of people who say there's no value yet. I mean, value is in the eye of the beholder, as beauty is. And I am typically, I'm not fully invested, I'll grant you that, but I want to be fully invested. And generally for me, it's a slow process. I can't be bearish on day one and day two be fully invested. That's just not my style. I move in more gradually. But it's not certainly that there's a dearth of opportunity that is preventing me. I think it's just my style that is preventing me from being fully invested. I hope in the next 3 to 6 months, I will be fully invested.
If you like this video, then like, share and subscribe to ET Now.